Thank you for joining us once again as we analyze the latest discussions surrounding Iraq's economy, the Iraqi dinar, and the policies that continue to shape the country's financial future. Our goal is to separate economic facts from speculation and provide balanced analysis based on publicly discussed developments and established financial principles. Today's discussion focuses on a claim that often appears in conversations among Iraqi dinar followers. The statement suggests that the decline in the Iraqi dinar's value was caused by United States sanctions, specifically sanctions administered through the U.S. Office of Foreign Assets Control, commonly known as OFAC. The claim further argues that, because Iraq once had a stronger official exchange rate before 2003, removing sanctions should automatically restore the dinar to its previous value of around $3.22 US. This is an important topic because many investors and observers encounter similar arguments online. However, understanding how exchange rates actually function requires looking beyond a single event or policy. Currency values are influenced by multiple economic, political, monetary, and institutional factors. While sanctions certainly affect an economy, they are only one part of a much larger picture. To understand this issue, it helps to revisit Iraq's monetary history. Before 2003, Iraq operated under a very different economic system. Exchange rates were administered under a centralized government with strict capital controls, limited international market participation, and significant restrictions on economic activity. During that period, the officially published exchange rate did not necessarily reflect what ordinary citizens or international businesses could freely obtain in open markets. In many countries experiencing sanctions or economic isolation, there is often a significant difference between an official exchange rate and the rate determined by supply and demand in informal markets. Therefore, historical official exchange rates should not automatically be interpreted as market-based valuations, comparable to today's foreign exchange environment. Sanctions unquestionably had major economic consequences for Iraq. They affected trade, investment, banking relationships, government revenues, imports, exports, and access to international financial markets. Economic sanctions generally reduce confidence, restrict financial flows, and slow economic growth. These effects can weaken a country's overall economic performance and indirectly influence confidence in its currency. However, it would be an oversimplification to conclude that sanctions alone determine the value of the Iraqi dinar, or that removing them would automatically restore an earlier exchange rate. Exchange rate determination is considerably more complex. One of the most important factors influencing any currency is monetary policy. Central banks carefully manage money supply, interest rates, foreign exchange reserves, inflation expectations, and liquidity conditions. The Central Bank of Iraq has spent many years implementing reforms designed to stabilize inflation, maintain confidence in the financial system, and support overall macroeconomic stability. Another important consideration is the quantity of currency in circulation. Since the early 2000s, Iraq's money supply has expanded significantly compared to previous decades. As economies grow, governments print additional currency to facilitate commerce, banking activity, salaries, and public spending. An increase in money supply alone does not necessarily create inflation if matched by economic growth, but it does mean historical exchange rates cannot simply be compared without considering changes in the amount of currency outstanding. Foreign exchange reserves are another critical factor. Iraq has accumulated substantial foreign currency reserves over the years, largely supported by oil exports. These reserves provide the central bank with the ability to stabilize the exchange rate and meet demand for foreign currency. Strong reserves contribute to financial confidence, but reserves alone do not determine what exchange rate should exist. Oil remains the backbone of Iraq's economy. Since petroleum exports generate the majority of government revenue and foreign exchange earnings, global energy prices significantly influence Iraq's fiscal position. Higher oil prices generally strengthen government finances, while lower prices create budgetary pressure. Because of this dependence, the value and stability of the dinar are closely linked to developments in international energy markets. Political stability also plays a major role. Investors typically prefer economies with predictable government institutions, effective legal systems, transparent regulations, and long-term policy consistency. Improvements in governance often attract greater investment, which can strengthen confidence in a country's currency over time. Conversely, periods of uncertainty may reduce investor confidence. Regardless of sanctions policy, the banking sector represents another essential piece of the equation. Iraq has spent years modernizing payment systems, strengthening anti-money laundering procedures, improving compliance standards, and increasing financial transparency. These reforms are intended to facilitate stronger relationships with international financial institutions and correspondent banks. Compliance with global banking standards is particularly important because international financial institutions must be confident that transactions meet anti-money laundering and counterterrorism financing requirements. These institutional reforms help integrate Iraq more fully into the global financial system. But they are separate from questions surrounding historical exchange rates. It is also important to distinguish between sanctions on a country and broader financial restrictions that may exist at different times. Various sanctions programs have existed over different periods, each with unique objectives and legal structures. Some sanctions target governments, while others target individuals, organizations, or specific sectors. Their economic impact varies depending on scope, duration, and implementation. When discussing OFAC specifically, it is useful to understand its general role. OFAC administers and enforces economic and trade sanctions based on U.S. foreign policy and national security objectives. These sanctions can restrict transactions involving designated individuals, organizations, entities, or jurisdictions. Their purpose is not to establish currency exchange rates directly. Instead, they influence financial activity through restrictions on transactions and market participation. Therefore, while sanctions may affect economic confidence and international financial relationships, they do not function as a simple switch that mechanically determines a currency's exchange rate. Another common misunderstanding involves the concept of reinstatement. Some discussions suggest that once restrictions disappear, a currency simply returns to its previous value. Modern foreign exchange markets generally do not operate this way. Exchange rates evolve according to current economic fundamentals, rather than historical benchmarks alone. Imagine two countries that experience similar sanctions decades apart. Even if both later normalize international relations, each country's currency would still depend on current inflation, productivity, exports, imports, fiscal policy, debt levels, economic growth, demographic trends, and monetary management. History provides context, but present-day fundamentals ultimately matter most. For Iraqi Dinar followers, this distinction is extremely important. Economic improvements certainly have the potential to strengthen confidence in Iraq's financial system over time. Increased investment, infrastructure development, diversified industries, stronger institutions, and continued banking modernization all contribute positively to long-term economic prospects. Yet none of these factors guarantees any specific future exchange rate. Looking at recent years, Iraq has undertaken numerous financial reforms aimed at increasing transparency. Digital payment systems have expanded. Banking modernization initiatives have accelerated. Compliance with international financial standards has received increasing attention. Government officials have repeatedly emphasized efforts to reduce dependence on cash transactions and strengthen formal banking activity. Such reforms may improve efficiency, reduce financial crime, increase investor confidence, and encourage greater economic participation. These developments represent structural improvements, rather than immediate exchange rate catalysts. International organizations frequently emphasize macroeconomic stability as a foundation for sustainable development. Stable inflation, responsible fiscal management, diversified economic growth, efficient public investment, and effective governance all contribute to long-term economic resilience. Currency stability often reflects these broader achievements, rather than isolated policy decisions. It is equally important to recognize the Central Bank of Iraq's objectives. Central banks generally prioritize price stability, financial stability, and confidence in the banking system. Sudden or dramatic exchange rate movements can create inflationary pressures, disrupt trade, and complicate government budgeting. Consequently, central banks often pursue gradual and carefully managed policies rather than abrupt adjustments. For businesses operating in Iraq, exchange rate stability provides predictability when importing goods, paying suppliers, managing contracts, and planning investments. Stable currency management benefits both domestic companies and foreign investors seeking a reliable business environment. Short-term implications of this discussion primarily involve market expectations. Whenever claims circulate suggesting automatic or immediate currency appreciation, investors should carefully distinguish between opinion and verified policy announcements. Financial markets respond to official decisions, published regulations, and measurable economic data rather than speculation alone. Responsible analysis therefore requires monitoring official statements from Iraqi authorities, central bank communications, government fiscal policy, banking reforms, economic statistics, and developments affecting oil revenues. These indicators provide a stronger foundation for understanding Iraq's economic direction than simplified historical comparisons. Long-term implications are broader. Continued institutional reform, stronger governance, improved infrastructure, diversified economic activity, increased private sector participation, and sustained macroeconomic stability could gradually strengthen Iraq's overall economic outlook. These developments may improve international confidence over time, although the precise impact on exchange rates depends on many interconnected variables. Diversification deserves particular attention. Iraq has long sought to reduce reliance on oil by expanding agriculture, manufacturing, logistics, tourism, technology, and private enterprise. A more diversified economy typically becomes less vulnerable to commodity price fluctuations and may enjoy more stable long-term growth. Education, workforce development, digital transformation, and infrastructure investment also contribute to economic competitiveness. These structural improvements increase productivity and can support sustainable economic expansion over many years. Foreign direct investment represents another important element. International investors generally evaluate legal certainty, regulatory transparency, contract enforcement, political stability, infrastructure quality, and financial system reliability before committing significant capital. Successful reforms in these areas can encourage greater investment, job creation, and technology transfer. For the banking sector, continued modernization enhances efficiency and financial inclusion. Greater use of electronic payments, improved access to financial services, stronger compliance systems, and expanded banking participation can strengthen the overall economy while reducing reliance on informal cash transactions. When evaluating any discussion about currency values, context is essential. A single historical exchange rate cannot be separated from the political, economic, and monetary conditions that existed at that time. Likewise, today's exchange rate reflects today's realities, rather than simply recreating historical circumstances. This does not mean historical events are irrelevant. Understanding Iraq's economic history provides valuable insight into how the country reached its current position. Sanctions, wars, reconstruction, institutional reforms, oil market cycles, fiscal policies, and monetary decisions have all contributed to the evolution of Iraq's economy. The key takeaway is that modern exchange rates emerge from a combination of domestic fundamentals and international market dynamics. Simplifying that process into one cause and one automatic outcome risks overlooking the complexity of economic policymaking. For Iraqi Dinar followers, the most constructive approach is to remain informed through credible economic reporting, official government releases, central bank publications, and recognized international financial institutions. Balanced analysis helps distinguish verified developments from assumptions that may circulate on social media or discussion forums. As Iraq continues pursuing financial modernization, economic diversification, banking reform, and institutional strengthening, these developments deserve careful attention because they reflect measurable progress. They may not provide immediate answers regarding future exchange rates, but they offer meaningful insight into the country's broader economic trajectory. Ultimately, discussions about sanctions and historical exchange rates should be viewed within the wider framework of Iraq's evolving economy. Economic strength is built through consistent policy implementation, stable institutions, productive investment, responsible fiscal management, effective monetary policy, and continued integration into the international financial system. Whether considering banking reforms, government initiatives, energy markets, or international financial cooperation, each development contributes one piece to a much larger economic picture. Responsible analysis means examining all of these components together, rather than relying on a single explanation. As always, We encourage viewers to evaluate information carefully, verify claims through reliable sources, and remember that financial markets are influenced by numerous interconnected factors. Balanced understanding is far more valuable than overly simplified conclusions. Thank you for watching today's analysis. If you appreciate responsible, factual, and balanced coverage of Iraqi dinar developments and Iraq's economy, be sure to subscribe to the channel and like the video so you never miss future updates. We remain committed to providing objective analysis rather than speculation. This content is provided for informational and educational purposes only and should not be considered financial, investment, or legal advice. Always conduct your own research and consult qualified financial professionals before making any investment decisions.